Hello everyone, welcome to the channel. So, let's talk about the biggest risk in the strategy that we have. So, when I talk about the biggest risk, one may think about underperformance for multiple years compared to the benchmark. Say it could be 4 or 5 years before it comes back up. So, this is normal. One may think the higher drawdown compared to a trend following strategy, because in trend following you usually have stop losses and you get out of the market when the market is in a downtrend, so you have your drawdowns controlled in trend following. But here it will be much higher. So I'm expecting somewhere in the range of normal, the broad markets drawdowns give a plus or minus 10% here and there. So if if I expect a 50% drawdown in the broader market in the next 30 years, so this strategy would give me a drawdown probably of 60% or 40%, give or take. So plus or minus 10% here and there. The reason here is the strategy has 100% exposure. So it's not like if the market is crashing, you take your money out and you sit with cash. As I said, with trend following, this happens, but here I am fully invested all the time. So the exposure is always 100%. So because of this reason, the drawdown will be higher. But is this the biggest risk? No. Yeah, as I said, these are not risks. These are I know that these are indirectly the fees that we need to pay to have outperformance compared to the broad market. So these are all normal. What is the biggest risk then? Yeah? So the biggest risk to the strategy is myself. This might be strange to hear, but let me tell why I am the biggest risk for this strategy for myself. Yeah. Because because of the above said features of the strategy, I'm afraid that I might abandon the strategy during its worst period. So it's going through a drawdown of 4 5 years. Then, yeah, it's obvious that we I might start questioning the strategy, and I may not have the faith anymore. So exactly, so losing faith before the edge has time to play out. So just because it has underperformed for a few years, I may lose the patience and move on to something that might be better for the market regime during that time. So this is the biggest risk that I foresee today. So I know that there is a risk. So how do I mitigate it? So I have tried to put some behavioral guardrail in a sense. So if ever in the future, if I need to, if I think of quitting this strategy, if I think of closing out all the positions in the strategy, what do I need to do? So I'm building a process where I can go ahead with the strategy. I can go ahead with stopping the strategy. So I can quit the strategy, but I need to meet this criteria. What is the criteria? So I should reread the book before I close all the positions. So let's say in 3 years' time, I decide that I want to stop magic formula investing, and at that time, be whatever the case, for whatever reasons I might be trying to move out of magic formula investing. So the rule that I have put for myself is I need to fulfill this checklist, reread the book, and for your reference, again, the book is The Little Book That Still Beats the Market. So I must reread this book, and then I can make whatever decision that I can make after that. So I can still go ahead to quit the strategy. So it's just that I want to make informed decision that time whenever I decide to quit. So that's all for today. Thank you.